Hello, Kramer's Corner with an update on the stock markets around the world, but primarily in US, of course. This video is for educational purpose only. There's no recommendation or advice whatsoever intended. I do apologize. I didn't do any updates late last week. I was away traveling, so I was actually on a D-Day tour in Normandy, France. So let's get cracking here with Nasdaq 100 that saw a little bit of setback on the 15th of May, Friday, new all-time high on the 14th. But what it did, it was actually on the RSI forming a divergence here. We can see that the RSI declined where the market moved higher, and that is a divergence, as we call it, or uptrend exhaustion indication, or indication of uptrend exhaustion. However, let's see, the trend is still intact, and as long as we can stay above this little spike down there, 28,628, there's still a chance for higher levels. Also looking at the weekly chart, it reached 200% of this correction here, 200% and a little bit. We didn't get all the way up to 30,000. We can still do that, maybe late May, early June. Positive sentiment on the weekly, no divergence, could indicate that we could see higher levels. But let's see how it develops here over the next few days, and we'll see that also S&P still pointing higher. Pre-market here, just very quickly on the future, you can see sold off but open again higher, sold off again. So there is a pressure to the downside, and we could risk a larger correction, but let's see about that. I'm not quite sure we'll get that just yet. We're going to see the 30-2 retracement all the way down here, 27,175 of the entire uptrend, and that is also in the consolidation area right there. So it's not really there yet. Just looking at the Nasdaq Composite Index, more or less the same, obviously. We can also see here that we have some divergence on the RSI. It should actually be formed right there. There we are. S&P 500. Bullish market on the 14th, sell-off Friday. That really hit hard. But look at this. There's no divergence on the RSI. RSI actually closed higher there on the 14th. So it indicates we could see higher levels on the S&P 500. So maybe it will lead the way, and there are other stocks in there than semiconductors also. So and we will get into that a little bit later. But still, positive sentiment on the RSI, bullish trend. Excuse me. What we can do, we can put in support there, and most importantly, that gap there that it created here back in when was that? That was back in early May. That gap is really the key support down to 72.59, 72.94. First warning that it will be tested if S&P 500 takes out and close below 73.38. But RSI indicates we could see higher levels for S&P 500. I also think we'll do that. On the weekly, no divergence on the RSI. Spike to the 176.4 projection at 75.25. Could still push higher if it takes out the peak there from the 14th, obviously. So be careful, but we are nearing exhaustion, but I think we could have one or two more positive weeks, maybe three. Pre-market, not much to talk about, setting back a little bit further, so we are still in a correction phase. And the Russell 2000 small cap index, illustrated here by the Russell 2000 ETF, formed this bearish engulfing on the 7th of May, and I think we talked about it in my previous one of my previous updates. So top and reversal, massive divergence on the RSI, indicating lower levels. We also had divergence from this peak there to this. So small caps are not really the flavor of the month. Of course, there will be some selected ones that will probably be doing okay, but we closed lower there also on Friday, so we could see further downside Key support 270 here, that should be observed, but let's see if we will get there down there or not. But at least top reversal. Also on the weekly, see Barry's engulfing. The body engulfs the previous body. We forget about the shadows, and that is also a top reversal pattern. So the small caps are not looking too good. Also in Asia, the Seng index really got hammered late last week, and it continued also here today on the Hang Seng index. Back in the cloud. And what is key, RSI never closed above 60 threshold, got rejected right there. So still negative sentiment. And if it moves back below 40 threshold, well, then there could be further downside potential for the Hang Seng index. And let's put on some support levels. We have a support here that it tested it Friday and this morning in Asian session. If it closes that gap down there, I know we didn't have the body, but that will be more or less the same. So there we have the body gap that it is testing. So this gap here is really, really key for Hang Seng. Nikkei, on the other hand, is doing a little bit better, but also correction kicking in here. This is the future, and we could see it setting back to these areas around the support or consolidation area, just around the a little bit higher. There we are, 60,120, 58,340. Europe is also under pressure, actually quite a bit. EuroStoxx50 again lower today, after being rejected here at 60,073 a couple of weeks ago. Support at 5,732, where we have the 200 moving average coming up. Still positive sentiment, but it's not really convincing on the European market. Still about the cloud, so there is some positivity, and I think we could see a bounce here maybe in the next few days also, especially if US can be lifted once again. The DAX index, after closing this gap there and pushing lower, bouncing a little bit today. So we are actually in positive territory compared to Friday, but also under pressure, and there is risk lower, despite the fact we have positive sentiment on the RSI. But if it can close the gap up to 24,635, then a bullish trend could resume. Now, let's have a look at some of these sectors and a few of those stocks in those sectors that could be key here the next few days and coming week or so. First of all, of course, semiconductor index, or the sector has been the driving force behind most of the rise on Nasdaq 100. Of course, there are some other stocks, tech stocks that have been also driving force. But now we have semiconductor index. The divergence on the RSI, we can see RSI declining. That's the strength indicator as the market actually moved higher, indicating top and reversal. And I will say that if we see it taking out that little spike down there at 495, then we could be in for a larger correction down in the area around 450, 460. Also looking at the tech sector, as we can see illustrated by the State Street Tech Select sector. I don't get any kickback or anything for promoting. I'm not promoting anything, but just saying. Also divergence there on the peak. So let's see, it really needs to take out the peak there from 14th of May to cancel this divergence on the RSI. So also top and reversal indication there, or at least uptrend exhaustion. But let's see if we can continue a little bit further. 171.30, 171 here on the ETF. If it takes out that well, then we could see a larger correction. So some of the companies driving this, and of course, I think it is safe to say Intel was one of the leading ones. But we talked about for quite some time. We had the breakaway gap, we have runaway gap, and we talked about exhaustion. Needed a real true exhaustion gap, but again, it's not a rule, it's just a rule of thumb. So last week it actually formed a doji evening star-like pattern here. We have a bullish candle. It's not a real doji. It didn't open and close in the same at the same price, but almost. So we consider it as a bit of a star, and then a bearish candle followed that. An evening pattern, top and reversal pattern, also given the fact that we have RSI divergence there indicating uptrend exhaustion. And Friday we got a really big setback. Key support at 99.60, that should be observed. If it takes out that, well, then I think we'll see larger correction, and then we have this gap area to worry about. But I think we could see over the next couple of weeks, it will probably try to bounce. Will it take out and make a new peak? That is debatable, because on the weekly, positive sentiment, no divergence despite that massive bearish candle there, but no divergence on the RSI, indicating we could see higher levels on the medium term, but for now we are in a correction phase, and RSI actually will be below its support there, so still a little bit under pressure. And of course we also have to talk about Nvidia, because it's the largest chip manufacturer. But here the picture is a little bit more blurry. On one hand, we had a higher close than a sell-off on Friday, and on the 20s, I have written here 20s, they are expected, that must be on Wednesday after market, I think it is. Earnings are expected to be released unless they change the date since I put it there. So that can really mean something. But however, RSI, no divergence, indicating likely highly level, at least there could be higher levels. There's nothing in the indicator here that points to that it couldn't do it. So there is a basis for it. On the other hand, here on the weekly RSI, there is divergence, but it broke above its falling trend line there, and still in a positive sentiment, could push higher. So despite this gap up there, then it could actually push to higher levels, and the trend is intact, and that could indicate higher levels for Nvidia, unless they really come out with a shocker on the Thursday. Then let's talk oil and natural gas, but especially oil. And you can check out my commodities update that I published on Sunday evening on Substack. If you're not on Substack and you see this video somewhere else, then go and sign up on Substack and get the latest. And you can also watch the commodity update there for free this time here on Substack, where I talk about oil. And oil is currently about to break higher, breaking above its falling trend line on the crude oil. And let's just very quickly have a look. You can see it's testing it here at the moment. But let's have a look at the oil sector that had a good day Friday, still in a bullish trend, above 55 moving average, positive sentiment on the RSI. If it moves back above the cloud, which I believe we will, I think we will see higher levels. You can see it almost also forms a triangle-like pattern here on the. This is the oil exploration companies. Where are we? There we are. And you can see this deep rising. So we are in this triangle-like pattern. I think we will see it breaking bullish out of it. And also the oil service companies in a correction phase, higher lows all the way, higher highs. Will it make a new higher high? It is quite likely, and it's indicated 0.25% higher. And some of the companies, and again, this is not a recommendation of these companies. You have ConocoPhilips. It's very similar to the index, obviously, and the sector and the crude oil, and also ExxonMobile. You can see, and that this is why I pointed out. You have the RSI here on the 60. Actually, was in a negative sentiment, but with the move Friday, it closed just a few inches, a few pips below the 60 threshold. I think it will close above today, and if it does, well, then there's further upside potential for also for Exxon here. All right, I will leave it with that, and check out other oil companies. They could be of interest. See if they have similar pattern, or if they have breakout patterns. That could be of some interest. Unfortunately I can't go through them all today. And also be aware, be careful with the semiconductors, probably quite volatile. All right, that's all for today. Have a nice day and keep charting out there.